and welcome to another episode of Daily Market Mastery with me, Rauchenwald. On this sunny Thursday, I hope you all had a great week so far. Before we get into it, as always, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. And besides that, don't forget all the resources that you're seeing during this live stream, so the charting software, broker, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I always recommend, if you haven't done so, check out the Elliott Wave principle that you can read online for free when you're using the link in the description down below. And with that said, we can jump right into it. And the first chart we have open here is actually GameStop. Now, I mentioned it yesterday that I expect, or actually not just yesterday, last week we went a little bit more into detail for GameStop, and I mentioned that I'm actually expecting that potentially we will get another 5-wave push down. And during yesterday's episode, we looked a little closer, and I mentioned that potentially this might be our wave 1, 2, and we will get our wave 3 down. So that was yesterday was here, this part, and so that we're very close to the 206.18 extension level. Maxon, we'll check that out later. And therefore, it looks like this is 1, 2, 3, 4. 4 not finished yet, so 4 will go a little bit further up potentially, especially after GameStop filed whatever file it was yesterday, or published the filing yesterday, that they shut down their lending facility, which basically reduces the reporting requirements and gives outsiders, so hedge funds and so on, actually less insight into what's going on or what GameStop is doing. So I expect that we might get a wave C still up here, somewhere in that area, and then we get our wave 5 push down. Now, I might be wrong with this, but if that's the case, then that's not enough of a push down. Although wave 5 doesn't have to go to a new high, or in this case, a new low. But as I covered in last week's episode, I actually expect that we will get a little bit lower, so you can check out any of last week's episodes to learn more about that. Now, if we take a look into our portfolio, we're starting slightly in the green today. Maxon dropped a little bit. We're gonna take a look at that in a second. Our GameStop calls that we wrote with expiry next week are obviously a little bit in the red, but that's okay. As long as GameStop stays below 25, 26, 30, 34, 35, they will expire worthless, and we'll just collect the small but still better than nothing premium of around $50 for the week. Although I have to admit, like, selling those calls yesterday for the price was actually a minor mistake, because we could have sold just $30 calls for all 500 shares for $45. So splitting it up like this to at the end get $5 more actually was a no-sense move. I should have, to be fair, yesterday, instead of selling that combination of covered calls for $50, should have left the price at $100 or $75 and just wait if it triggers or not. But yeah, that's already done. So we're just gonna see, or wait and see till next Friday and see how those calls potentially expire worthless. Yeah, now we have the alert from Maxon, so we're gonna take a look at that next. I think here my entry was a little bit rushed, because, oh, there we broke the level here, which is relevant because it marked the idea that this might be wave, the entire ABC correction. I think I misjudged it here and thought that this would be already the entire correction, and expected that this might be wave 1, 2, 3. However, it looks more likely that the corrective pattern behaves like this. So A, B, C. We're right now approaching the 100% target for a wave C. Yeah, it would become problematic only if we go below 1121. So I'm gonna create an alert here. 0.1121, because at this level our pattern would become invalid, and we would just have to take the loss. Here at the current level of 1243, we actually would have a perfect AB, or potential perfect ABC pattern. In this case, one of the cases where basically wave A is a little bit drawn out, wave B also, and wave C is then a relatively drastic decline. Yeah, as said, if we go below the 1121, then that would mean pattern invalid, and we'd have to yeah, just cut our losses. Or actually, let's zoom out, double checking that we don't miss step exactly. So then this pattern becomes invalid and there's more room down, and we just burned a little bit of cash. Thankfully, we didn't put much money into Maxen yet. We just pretty much expected potentially that there is a starting pattern. And if it turns out to be wrong, then so be it. Yeah, so obviously we'll have to keep an eye on that today. And yeah, so we covered GameStop, we covered Maxen. Let's make our way actually from the bottom. Next thing would be not Nvidia, but NVAX. Nvidia had good earnings, yet is still dropping. Novavax, we are waiting for the breakout to the top. We are now around the 50% retracement level and are assuming that our wave 4, yeah, there goes our Maxen position. So that one we can just now sell, mid. There we go, submit. And it's going to be hard to catch the mid here. Yeah, so sold that, realized a $30 or $40 loss on this position, which is a little bit of a pity. So we're going to now circle back real quick to Maxen. Getting burned multiple times on the solar front. I don't know what news they have. There has to be some bad news, obviously, for this to happen. But the idea was that this looks potentially like it might either be 1, 2, 3, 4, and we get wave 5, or that this might be wave 1 and we're currently in wave 2, with initially the thought that this might already be the ABC pattern, followed by the next 1, 2, 3, 4. So now, and until this point, we were alive, and here now, yeah, we're pretty much dead. I mean, we got out of it. Again, could have been better, could have been worse. In this case, pattern invalid. So yeah, that's the hard part when we analyze individual stocks, and especially when we're looking at charts like this, where we're trying to potentially see or catch the bottom. So like it's hard to catch a falling knife. Everybody knows that. Yeah, and sucks a little bit that this didn't turn out to develop into a valid pattern, but got invalidated here. But it is what it is, and we're just gonna yeah, like live with that. Similar, we still have positions in SPQR, where probably those shares will eventually become worthless, or the company actually turns around. And we have positions there actually, yeah, we have data, and Green Wave as well, similar thing. Now, again, moving on to Novavax. So here we have a similar assumption that this is 1, 2, 3, 4, 5 to finish a third wave of a bigger degree, and that we're currently in wave 4. Now, potentially wave 4 finished A, B, C like this, which means we might now be in wave 5. We got in around this area here. And hi, Olga. And we're currently waiting to see if our pattern holds. It becomes invalid. We're also going to set it, or not invalid, but basically, yeah, our current assumption becomes invalid, but it's still not fully invalid if we cross the 866. So pattern potentially invalid. So I'm going to add an alert there. So right now, I think it's a good risk-reward proposition, because one could set the stop loss at 866 with a take profit, as we can see, for the next couple of weeks or months between 30 and 60 if the pattern holds up. So risk around, what is that, then 20%, and reward more than 200. So like a 1 to 10 ratio, or 1 to 20 actually, 1 to 10 ratio at least. Yeah, I just looked at Maxen. It was the first thing I'd opened today, and we actually got out somewhere, obviously a little bit bad, but the pattern simply became invalid. So the assumption that this is follows or started to follow an Elliott Wave pattern based on wave 1, A, B, C, and then we are in the next wave, became invalid. Yeah, like partially invalid here and completely invalid here. Yeah, just came down to mid-August price. As I said, Maxen shareholder TCL is still exercising warrants. I just checked the chart. I don't see a mid-August price or so. I mean, maybe there's something. My data should actually, yeah, that's the data I have. So, oh, I don't have data that far back. Yeah, so for me the history looks like this. If I would have a longer history here, that shows that there is a previous pattern or so, I would probably not have closed the position. But considering how it went, and that the only potential pattern that was visible here became invalidated here, I decided to just get out. Now, obviously, I could have held and closed now here at a smaller loss or so, but at the end, I also didn't throw a lot of money in there, but had like, what now, $100 in there, so 40% loss or something. Can live with that. And yeah, so that about that. Now let's actually look at NVIDIA. They're on the 4-hour chart. So we basically are going up from here. So yesterday, despite good earnings, we had a drop, but we can see that we retraced. I mean, there are multiple things. First of all, we have our potential wave 1, 2 that terminates around the, so 1, 2, and then wave 3 that terminates around the 2618 extension level, which is very often the end of a third wave. Then let's double check here. Here we don't. Yeah, here we have a 38.2 retracement for wave 2. So very often we would expect the 61.8 retracement for wave 4. Although it goes a little bit further here, so it's not that perfect. So theoretically, the 50% retracement here would already be sufficient, marking this as 0.3 and this here as our corrective A, B, C. Now we're going to double check if that follows any of our usual rules. So a wave C usually should reach the 100% extension level and at most bounce at the 161.8 of wave A, which it does here. I mean, those are not guarantees and always happen, but those are guidelines that happen often enough to use this as a guide for trading decisions, which means very likely NVIDIA finished the fourth wave here, retracing a little bit more than 50% of the third wave, and we should now be in fifth wave territory. And if we are now in fifth wave territory, and that's fifth wave of this third wave, then what we would expect is the following. So we take wave 2, wave 3, and wave 4 as an expansion, and we get the first profit target at 132.21 and the second profit target at 142.84. Now, in addition to that, this entire 5-wave movement, so 1, 2, 3, 4, 5, is nothing else but the third wave that we start here based on our pattern 1, 2, 3. So we're also going to add something else here to give us a little bit more information. So that's the so-called destination channel based on Kennedy channeling technique. And based on that, the fifth wave usually reaches the median or the top of this destination channel. Sometimes it goes higher than that as well. Now we're going to get rid of that base channel for now, so it can shoot over. Why does this help us? I mean, it's not a guarantee. It's just what often enough happens to base or help us base decisions on that. So first of all, we have our big wave 1, 2, and again, we're currently potentially in the fifth wave to finish this third wave. And wave 3 very often terminates around the 2618 extension level of wave 1. Now we don't need that smaller extension anymore. This one here, so where we already know 1, 2, and 3 terminates at the 2618 extension level of this one too. Now we have our wave 4 that follows the rules. Yeah, I'm gonna check and respond in a second. So we have wave 4 that follows the rules relatively well. A, B, wave C terminates at the 161.8 expansion level of wave A, B, which means we are potentially set in the fifth wave territory. If we follow Kennedy channeling technique, our confirmation for a fifth wave would be once we break out roughly from this trend line here. So if you are cautious, you can wait. Other than that, I think it's, again, my opinion, don't bet your house on it, do your own research, make your own decisions. But I think it's potentially not a bad entry to pick whatever the low was. Here we have 115.01 on both, so 115.01, 115.01. So if you want to go long, the stop loss would be at 115.01 and the take profit theoretically 132 to 142. However, if we combine that, so our fifth wave target would be this green area here, the minimum target and the in quotes maximum target. It's not always the maximum, sometimes it can go higher and so on. But in addition to that, we also have a bigger wave 1, 2, and again, very often wave 3 terminates around the 2618 extension level of that. Yeah. And so basically we have the big target area here and then a refined target area here. So I would say if one would go long right now, the target area would be 135 to 140. So that we potentially see now a 1, 2, 3, 4, 5 that takes us here, maybe a little bit breakthrough and then bounce to finish this bigger 1, 2, 3. Again, then we get another correction. In this case, I mean, I'm going a little bit too far ahead already, but if we look further here, we retraced 61.8%. So we expect, if we expect the third wave or the fourth wave, the bigger one, to only retrace 38.2%. But we can see even if we reach 139.12, so exactly a 261.8 extension, that bigger fourth wave should retrace down again to 123. So yeah, I mean, obviously it's possible that the correction here hasn't finished, but considering everything, I think it actually has. We'll see if we fall below 115.01, in which case I'm wrong and the correction hasn't finished. Theoretically, if one would want to be on the safer side, but still believes that this is wave 1, 2, wave 1, 2, 3, 4, then one would need to set the stop loss here at the wave 2 point of 97.15. So basically saying, okay, wave 4 might still be unfinished, but that's okay, because then we cannot go lower than this unless it's not 1, 2, 3, but something else. Yeah. Anyway, you can get rid of that. So right now I said we would expect 1, 2, 3, 4 and wait for wave 5 to play out into this area. Confirmation is set for the potential wave 5 would be the break above this trend line. Yeah, one could wait for that, or one could enter now, or just play with options. Now, Olga, thanks for sharing. Barnes & Noble Educational announced they want to vote for a decrease of shares. So for basically reverse split. There we also, looks like, yeah, we'll still have to wait and see. I mean, we have here the pattern as we see this wave 1, 2, 3, 4, and the target area for wave 5 we can see here. We don't need this one anymore. It was just to show us that potentially this is our wave 3, since we bounded at the 338.2 extension of wave 1. And that we are already in the target area here for the 5th wave. And again, our assumption is that we are currently basically 1, 2, 3, 4, 5, 5 potentially already finished, considering how close we got to our, in quotes, maximum target area. And that we right now should get our ABC that potentially should retrace 38.2%. Now, one is to point out that those retracements or those corrections would also be, yeah, like they don't have to retrace that far. The 38.2, 50, and 61.8 levels are just the most common for those wave retracements. So overall, we're still bullish on BNet, but we'll have to wait. And right now, the assumption is that in the short-term future, we'll actually have a little bit of downwards movement before we continue the upwards movement. And that's that with BNet. Now, at which point would our NVIDIA pattern become invalid? At around 115, okay. Moving on, SMCI, the one thing that got covered in by Hindenburg research about their, let's call it, creative accounting practices. We can see with the naked eye that we actually now have an 1, 2, 3, 4, 5, and wave 5 reaches almost the maximum target for that wave C pattern. We can also see that our potential 1, 2, 3 bounces close to the 1618 extension level here. So based up, sorry. That's this one. Okay, no, we need that one. Sorry. Up. So we can also see here 1, 2, 3, 3 bounces at the 2618 extension level. Again, it's just so often the case that the third wave terminates here, that we then get wave 4, and wave 5 pushes down here. So it right now looks, if we consider this potential expansion here, ABC, that goes to 1618, that either this is ABC, and we actually are going to go further up from here. So this is the entire correction. Or this is wave 1, 2, and this is only the first wave of wave 3. So that will be 1, 2, 3, 4, 5. Yeah. Considering the creative finances of SMCI, yeah, I would not be surprised if we see a further downward trend. But considering how irrational the markets can be, I also would not be surprised if that actually was the entire correction. So right now, this might not be the worst time to, I mean, already a little late, but here the 408, 380 mark, that would have been a good area to potentially enter, in quotes, as a gamble. Probably best as an options play, so you limit the risk to the premium you paid. But yeah, the one thing we can clearly see is definitely that this movement here, 1, 2, 3, 4, 5, actually follows the book to the letter. Now we can go a little bit further here if we verify our wave 5 targets. So if that's wave 3, that's wave 4, and we can see we turn around exactly at the minimum wave 5 target. I mean, exactly, it went down to 395 and the minimum target was at 408. So close enough in my opinion. So we crossed the minimum target to terminate here, which means right now we'd actually, no matter what's the case, so no matter if we are going down from here or not, we finished a 5-wave pattern downwards, which means we would expect at least a 38.2 retracement upwards. Now that doesn't always happen, as explained, but even if the overall pattern still would be downwards, right now the pattern would suggest that we first have an upwards move, so at least a corrective. So, well, let's circle back. So either this is a set wave 1, 2, and we're in the progress of wave 3, in which case this would be the first 5 waves down and we get a retracement. So a wave 1, wave 2, usually to at least 38.2%, but potentially more before we continue further down. Or considering how precisely those 5 waves terminate close to the maximum wave C target, it's also possibly, and in my opinion, probably the more likely scenario right now, that this is wave A, B, C, and that we're actually going to develop 5 waves up from here. So if one were to enter, stop loss would be at the recent low and take profit would be undefined right now. For that, we need to see candles play out. Considering that we're looking at a weekly chart, this will take time. And for now, as said, what we have on the chart is a wonderful ABC pattern here for a wave B and a perfect 1, 2, 3, 4, 5 pattern down here for potentially wave C, considering how it behaves in relation to that first movement here. And that covers SMCI. And COS, do we have? So here we have our potential wave 1, 2, 3, 4 finishes as ABC. So we are right now likely in the 5th wave here. So stop loss would be at 862 for any position, and profit targets for the 5th wave, as we can see, are at, we can get rid of this one, are at 1135 to 1345. And just like with, what was it? Whatever stock we looked at earlier, yeah, that 1, 2, 3, 4, 5 should finish this 3rd wave. So 1, 2, 3, and the next 3rd wave target would actually be here in this area. So we see close to the minimum target. So 1135 to 1205 would be the first target, in my opinion, for this for this 3rd wave, from which we then would get our 4th wave retracement and then the bigger 5th wave. So that's going to be interesting to see if it plays out like this. I think we already more or less, if we use Kennedy channeling technique, have our confirmation that we are in 5th wave territory. We have the breakout from this deceleration trend line. And if we were talking about time frames, we can use the destination channel by connecting point 2, point 4 with a parallel through point 3. Parallel, yeah, like let's do it as close enough. And again, the 5th wave should reach the median or the top of that destination channel, which gives us a rough idea in terms of time frame. So where basically this area here is crossing that line, and that line, that would be, in quotes, the time frame where we roughly would expect that to happen. So between September 2nd, which is a trading holiday, markets closed if I'm not mistaken, and the other one would be crossing the line on September 5th. And so that would be the expectations, that by September 5th we have that. Again, it's not a guarantee, it's just something that, using Kennedy channeling technique, wave 5 should touch the median. So that would be where our target area overlaps with the median, because the top channel only overlaps on the day when the market is, as far as I recall, closed. So we would aim for that. So September 5th, a target of above $11 might be interesting as a play with call options, or just to hold the shares. I mean, overall, we're talking about like 20% return until next Friday. Definitely not too bad as a possibility, with relatively little risk to the downside. And that's cost. Now, no is now below 30 cents again. So again, I still expect a push up here on a closer chart, so that to finish basically 1, 2, 3, A, B, C for wave 4, and then wave 5 down. And then we have the NASDAQ. The NASDAQ that now actually made a 50% retracement to here, and similar situations to what we had with other stocks today already. Wave 1, 2, wave 3 terminates at the 238.2 extension level. So we can remove that one. We are now in our wave 4 that likely finished here at the 50% retracement, giving us a 5th level or wave 5 target, which again is just the end of this bigger 1, 2, 3, and where we get the overlapping areas like this. And again, we get rid, or we actually use that base channel here and adjust it. So if that's our wave 3, this here is our potential wave 2 on that scale here. Let's make that a little bit back. So this is our potential wave 2, and our wave 3 is here. So as for the time frame, we can see that in the NASDAQ, we would expect it to take a little bit longer. We have an overlap of the top on September 9th, and the median, I mean, the minimum target, or the first target would actually be already August 31st. So that's the weekend, not going to happen. That would be September 9th. And the next target would then be after September 20th. So I'd expect now to see a 1, 2, 3, 4, 5 to play out into that target area that we are waiting for. Now, that's the NASDAQ. I think SPY is going to look very similar as well. Indeed, one thing we haven't checked here is how far we are retracing. Okay, there we did not retrace to 38.2 at all. Oh, wrong. That would be our pattern. But still, however, we reached another important retracement level, the 23.6, which is the counterpart to the 78.6 retracement. It's not as often, that's why it's not on my usual setup, but it's still sufficient, which means it's possible that we actually, so considering this here, we have our wave 1, 2 potentially, and can I get that? Nope, yeah, like this. Okay, so 3. That's the starting point, wave 1, so wave 1, 2. So this is then the starting point of wave 3. This is the end point of wave 3, and this is the end point of wave 4. And then we have our bigger extension. So that one we can get rid of because it just pointed towards 1, 2, 3. And now we have our bigger level here up. And we can again see the overlap. Okay, in this case, we do not get an overlap. That's going to be interesting. We see that the minimum target is already above our, so assuming we are right here with 3, 4, and 5, the minimum target would already be above our 2618 level. Our destination channel, would be this one if we are right with our pattern. So very, very narrow. And again, we don't have, in this case, an overlapping area. The only thing that we have that kind of like overlaps would be the 338.2 target area. So, which brings up multiple options. I mean, first of all, if we use Kennedy channeling technique, which also is not like guarantees, but it's just like what's most likely to happen or how the pattern looks right now. Once we, or if we break above this trend line here, we are potentially in the confirmed 5th wave. Yeah, it's not guaranteed, but it's how Kennedy channeling technique works. Sorry, Olga, didn't see your message. Have a great day. Thanks for stopping by. and have a great weekend, because I'm not going to be at home tomorrow, so no stream tomorrow. So see you then next week. Yeah, so using candidate channeling technique, once we have a breakout from that deceleration trend line, we would be in confirmed fifth wave territory. Yeah, so if we're in fifth wave territory, we would have finished the wave 4 here, and we get those target areas here where we don't have an overlap. However, we have the close overlap here with another target area for this bigger 1, 2, 3. Yeah. So option number 1 is our movement up here, 1, 2, 3, 4, 5 will actually take us into this area of 590 to 92. So we would just shoot briefly over this and basically then have our next corrective wave, which kind of makes sense. I mean, the 600 level would be a psychological level, I guess, where we might see some people, selling. And option number 2 is the correction isn't finished yet, and we actually still have a little bit way down to go, in which case we obviously see our target areas would adjust. So if we, let's actually do that. If we again add our retracement for wave 3, I know it gets a little cluttered on the chart, but just so bear with me. That's the third wave. Yeah. We can see if we retrace to 61.8%, for example, so this would just be, I don't know, ABC, ABC, and then we get another ABC pattern downwards or so, or 1, 2, 3, 4, and we get a wave 5 push, and then ABC or so. So if there's still more correction to come, which I consider unlikely at the moment, but technically, if we were to retrace further, we can see even at the 38.2 retracement level, our minimum target would align with our, in quotes, most likely target for a third wave. If we reach to 61.8, we have a nice overlapping area. Right now, I, however, consider it more likely that we go here. Now, one additional thing would be if we take a horizontal line here, because, yeah, I mean, assuming that this is a somehow a wave 1, 2, 3, 4, 5 down here for a wave 1, then wave 2 could not go higher than this. Oh, no, if it's the entire wave 1, then wave 2 could not go higher than, could not go higher than that. Yeah, that doesn't help us very much. From the looks of it, this is an ABC corrective pattern, and we should be on the way up, however. So we're going to treat it like that. I just wanted to point out there's also the option that we first retrace further, which would get our target areas to overlap nicer, because we did not retrace to at least 38.2% here, which we again don't necessarily have to do. But yeah, so SPY, we also expect that. We covered that. Let's look at Maxen one more time. Okay, so still doing that. We covered no immersion. We are still also in a waiting pattern. We're right now at the potential wave A, B, C 100% target. So this would mark a nice turnaround point close to the 61.8 retracement. So we'll have to wait a couple of days to see how that plays out. If we either start our movement upwards here and have our confirmation, or if it turns out that I'm somehow wrong on this pattern and we're going further down. And outside of that, I think that's pretty much it. Like Faraday futures, what are we doing there? Is that a pattern already? There we would actually expect further downwards movement first. So 1, 2, 3, 4, and a push for 5. So we're still waiting here. And wait, their data is from, today. Okay. CrowdStrike, also something we wanted to check. There we had our wave 1, 2, 3, 4, 5 potentially, and are currently in what we think most likely is our wave B, and that wave B should subdivide as A, B, C. So we bounced a little at the 50% retracement level, but then made it through it, so that we should still potentially see the 61.8 or 78.6 before we get to see our wave C further down, based on this likely not being wave A, B, C, but more likely being only wave A of a bigger corrective pattern. And covered costs, yep. I mean, chart's getting a little full and it's hard to recall everything always from the top of my head, but yep. And I think with that, we're actually going to end it for today, so I can get a few other things done as well. And yeah, so as said, tomorrow, let's switch here cameras. So as said, tomorrow there will be no stream since spending the weekend somewhere else. Next stream, if I'm not mistaken, would then be next Tuesday, since again the 2nd of September, I think the markets are closed. I will verify that later. As always, don't forget, like, subscribe, enable notifications so you actually get an email once I schedule the next live stream, and so you don't miss out during or on the next episode. Yeah, thanks for stopping by. I hope you were able to take something away from it, and looking forward to see you all the next week at in another episode of Daily Market Mastery. See you then. Bye bye.